Hey everyone, welcome to a Optimum FX weekly analysis. This video I'll be doing analysis across our major currency pairs. I'll be looking at gold and I'll be looking at what macroeconomic data is going to be released this week. So it's currently the 27th of June today, 2021. The market doesn't open for another 12 hours in my time zone. So firstly, I'm going to look at what macroeconomic data is going to be released across our major economies. Then I'll be going to the charts and mapping out potential trade ideas with the fundamental and technical confirms. So first one you've got to realize is that it's going to be the end of Q2, so the end of June on, was it Wednesday? Yeah. So it's going to be on the end of Wednesday. So I'm not going to expect too much changes or too much volatility with the early on to midweek due to investors waiting for the new quarter. I'm not going to expect too much volatility or too much volume. I mean, there's still going to be like trade ideas, probably little scalps on potentially intraday trades planned out. But I'll be, you probably see a lot more clear moves come next month because we must also realize investors are closing their positions. So let's talk about what macro data is going to be released this week. So on Monday we do have Fed members speaking. Tuesday we do have weekly red block index along with monthly housing price index and Case-Shiller home price index. And consumer confidence on Wednesday to end the month. We do have weekly mortgage applications, ADP, employment change, home sales, and crude oil stock exchange. I'm only really talking about the data that's really going to impact the markets. Then we have OPEC meeting throughout Thursday, which is going to impact the price of oil. We do have challenger job cuts, weekly jobless claims, a bunch of PMI data from the Institute of Supply Management, and market manufacturing data, natural gas storage change later in the day, and total vehicle sales. I'm not going to expect any volatility or not much volatility with the US dollar. And on Friday, since it is the first week of the month, we have NFP, for you gamblers, for you retail traders out there, for you guys want to catch those big moves. We've got NFP, like even with all you South African traders out there, I was trading Nasdaq for some reason. We do have NFP coming out. Anyway, with that, we do have goods trade balance data along with employment data throughout the day, factory orders, which you'll probably get a decent indication with the PMI data of what the outcome is going to be. And week we do have Baker Hughes oil rig count. You're going to see a lot of volatility when this data actually gets released because employment, interest rates, and GDP are like your leading indicators. I'm not going to say indicators, but they're going to bring a lot of volatility and volume to the financial markets, right? Time and time again, like they're your three main, like probably employment first. Employment interest rates are kind of like tier one, and then comes GDP/trade balance. That's another story. I'm not going to go into too much detail. This is just going to drag out. So on Tuesday we do have consumer confidence along with industrial confidence, with business climate and the economic sentiment indicator. Wednesday we do have CPI data being released. On Thursday we only have manufacturing PMI along with unemployment rate. So unemployment, like I said, unemployment, it's one of the reports that's going to bring a lot of volatility to the euro, the euro dollar and euro equities. Moving on, we do have PPI, producer price index, which is essentially the inverse of consumer price index, right? So consumer price index is the price of like goods and services that consumers pay. So like people pay, right? Producer price index is the inverse. Now, why is it the inverse? It's the inverse because it's what producers, what wholesalers, manufacturers are paying for goods and services. All right. So that's the difference, but you're going to get a good indication of what the PPI data is from the CPI data, because, well, for instance, if CPI data is high, if it actually goes above 1% or 2% on that basis, more than likely PPI is going to increase. If it doesn't increase, obviously someone's being screwed over, the consumer, if you didn't get that. But yeah, eyes on for CPI. Unemployment's going to be the big thing as well, and PPI as well to end the week. So moving on to the UK. So UK, we do have nationwide housing prices, monthly basis. We do have the money supply data. I don't know why that's like low impactful. It's actually impacts sterling like a fair bit, just from my experience. Next, we do have mortgage approvals. So this is on Tuesday. On Wednesday, we do have current account and GDP numbers, and subsequently to that, we do have Bank of England member Haldane speaking, however you want to pronounce it. Thursday, we do have manufacturing PMI data being released, and that's about all. Your bond options, you're not really going to, it's not really going to impact the sterling nor UK equities that much. Bank of Japan summary of opinions, that's not really going to bring too much data. It's just essentially the Monetary Policy Committee or Bank of Japan members just having their economic forecast. I believe they have that meeting, I think, like 8 times a year, which is like, and it happens like a week after the Bank of Japan monetary policy statement, which is the interest rate decision. I don't want to bore you with that macro stuff, so moving on. Later in the day on Monday, so that's like early in Asian session. So on Monday, we do have unemployment rate and retail trade. Like I said, unemployment rate is probably one of the most impactful data to Japanese yen and Japanese equities, so the Nikkei. We got retail trade. On Tuesday, we do have industrial production. And Wednesday, we do have consumer confidence index, which is just a survey of consumers, showing their confidence within the economy. Construction orders on a yearly basis. We do have manufacturing outlook, an index, foreign bond investment. Shouldn't really pay too much attention to that because it happens on a weekly basis. We got on Thursday, we have Japanese manufacturing PMI data. And yeah, we don't really have much going on with the Japanese economy after that. Like all the impactful data is going to be happening on Wednesday. Sorry. Yeah, so on Wednesday and Monday. So Monday and Wednesday, especially with the unemployment rate. So moving on to Canada. We do have raw material price index along with GDP on a monthly basis on Wednesday. Thursday, we do have a bank holiday with PMI data being released. PMI data being released, so you can get a bit of an indication just from the GDP numbers. I believe Canada's still in a deficit at the moment, or as you can see here, it's still in a deficit. So I'm not going to, personally, I'm not going to really expect it to be way above consensus. I'm expecting it to be neutral with the consensus. So PMI data on Thursday. Friday, we do have imports and exports data being released, but you're going to get a good indication of what these numbers are going to look like from the GDP that's being released on Wednesday. So moving on to Australia, we do have manufacturing index, the AIG performance, which is the MFG is just a manufacturing index. So manufacturing PMI on Thursday, we do have import-export trade balance data being released on Thursday, and on Friday we do have home loans and investment lending for homes. So moving on, let's go straight to the charts. I don't really want to talk about the macro data and what they mean because it would just drag out. I mean, I could go on and talk about it, but it's just going to go on for more than an hour, to say the least. So what can we see on a technical perspective, right? So we were in this high time frame range for a few months, right? Few months. So we did actually break above here. We failed to break above that level again. Once we actually broke below here, obviously there was like a lot of sell side liquidity, and fundamentally it wasn't just a technical reason as to why there was a strong sell off in the Australian dollar. If you go on the euro, there's a massive sell off here. Go to pound, massive sell off here. Yen, bigger sell off here. And USD Cad is the inverse. Alright, so I'm not trying to confuse you. I'm just saying, there's a lot of sell side liquidity, and what is the reason for that? It's because the Federal Reserve, on their latest FOMC meeting, where they had the cash rate decision, they were essentially just talking about having at least 2 interest rate hikes before the end of 2023. Yeah, before the end of 2023. And what does that do to investors? They're like, all right, the US economy is booming, okay? It's rebounding, unemployment's getting lower, GDP numbers are up to forecast, stocks only go up. It's all happy times, they're printing money, inflation's going up, it's only transitory, so it's only temporary. So yeah, and then what does that, and how do investors digest that information? So investors digest that information saying, all right, it'd be a lot safer to buy US treasuries, right? Or buy US foreign exchange reserves, because they're going to get a higher return, right? And it's safer as well, because if the interest rate is higher in the economy, it shows that it's well balanced, it's healthy. You only decrease interest rates, which is what we've completely done last year because of this COVID pandemic stuff. They only decrease interest rates. One reason, they only decrease the interest rates to increase consumer spending, right? Because obviously unemployment's a lot higher. So what do I do to fuel the economy, right? They lower interest rates, so they lower the repayments. That's why stocks have been going up, because especially with the Nasdaq as well, because these big tech companies, they borrow money, right? And then if interest rates are near zero, what does that mean? Their revenue is a lot higher. Then what does that mean? Later on, when the Federal Reserve starts to increase the interest rates, their revenue goes lower. So we've got to realize, stocks don't go up forever, okay? They do not go up forever. Like eventually they're going to deal with a correction and so forth, because their revenue isn't going to be as high compared to the interest rates that are in place right now. So moving on a technical standpoint, so what am I looking at for the Australian dollar? So with the Australian dollar, we've definitely broken below this range. We did find a bit of a higher time frame support at this level. I was actually really eyeing this previous low here. Obviously that just got straight disrespected. And now we're in this like a bit of a bullish corrective structure, So we're in this ascending, like we're essentially in this like ascending channel up, okay? So we can definitely see that is like horrible. So yeah, we can definitely see that, steadily making our way up. US dollar is being corrected. Like this is essentially the inverse on the US dollar chart. So what does this mean? Okay, so what I'm liking, if I'm just taking a position on a technical perspective, what I'm liking is if we can remain above 75,800, get some high time frame candle body closures above this level, I can see a continued rally up in the Australian dollar with a continued risk on sentiment. And what I'd really want to see is if Dixie can come below here, and if we even if we break below this level here, this little, hold on, let's see here. So just below these candle body closures here, right? If we can actually come below this level here, get some nice candle body retest and actually stay below here, and if we can potentially break and retest below here, we might just form a bit of a range here initially. But then if we can get some strong selling pressure, we can continue the bear run down, right, in the strong corrective structure. Because you've got to realize if we look at the higher time frame, we're matching up with these previous highs here and this little accumulation area here, okay? That's where it actually peaked. But now we're at this, we're at this decision level right here. Okay, so when we actually did come down previously, we did, kind of form a bit of a range here on the US dollar. So your safest bet, like I really shouldn't have said bet. So your safest idea or forecast prediction is that if we can get some nice candle body closures below here, continue selling pressure down, and have a bit of a risk on sentiment, see euro pump up, see the sterling pump up, and see the equity market start to rally, we can definitely take some longs on the Australian dollar. Okay, so moving back to the Australian dollar, if we can remain above here, get some nice candle body support, I don't think we're going to remain in this higher time frame channel because it's a very tight channel. Like, it's just an upwards channel. Like, I'm not seeing any deep pullbacks here. I'm not seeing any 50% retracements or anything like that. But if we can see, like, you can't, like, this is really nice structure, bullish push to the upside. Essentially, we're making this like a previous support now, and essentially we're just doing the same thing over and over and over. Okay, so essentially what I'm looking for is if we can get a nice candle body retest here, 35,800, I'm looking to take some longs. And yeah, more than likely I'm looking to take some longs. But if we can break and retest above here, 76 flat, we can continue our longs. But in order for that to happen, I would need to see TXE just stay below this level here. If it actually comes below this level here, I'll be a lot safer with longs. I can obviously watch price action carefully. We can potentially take some scalps throughout the week, throughout London or NY session. We can take some buys, and we're at this little sensitive area here, right? Where we did generate a bit of a consolidation, accumulation area before we actually did push further to the downside. So yeah, this is a little key decision here, but I'd be a lot safer if we got like a nice candle body retest of these lows here, 75.8, continue back up to 76. So that's with the Australian dollar. Looking at euros, it's the same thing. So I've said this time and time and again. So your risk currency. So if I'm looking at the euro dollar, sterling dollar, or the Aussie dollar, they all move similar, right? They all move very similar. Obviously the Australian dollar is a bit stronger. Obviously some risk currencies are going to be stronger than the other due to macroeconomic data. So moving on to euro, if we actually do get some positive unemployment and CPI numbers, I'm really liking if we can probably stay. If we can stay in this range here, we can get some higher risk buys at 191, 190 or 191, 200. Match, and then failing to break below these previous highs here. And that's what I'm really liking at the moment. That will be high risk buys, just safer buys if we can actually retest above 119,550. So if we can break and retest above that, I'd like to take some continued sells, get some nice candle body closures on the high time frame, 4 hour, 1 hour. Even we could actually even scalp it, because we can potentially scalp these ideas. We can potentially take these high risk entries here, high risk buys here, and if it stops us out, and obviously you're going to have a decent risk to reward. Obviously if it stops us out, we can wait for another entry. The next high risk buy would be at the high time frame key level. Okay, but more than likely we will just play around sort of a range here. But yeah, like this, and then fundamentally what's going to impact it, we do have in regards to the US, right? So we don't have really too much, we do have house price index, consumer confidence, mortgage applications, and employment change. Then we got the PMI data, right? Now on the euro, early in the week on Tuesday and Wednesday, we have CPI data, consumer confidence, business climate data. And on Thursday we got the unemployment rate. So just keep those, just keep that on your calendar, and just monitor price action very carefully, and we can potentially take some high risk buys here and safer buys here with a nice candle body retest above that liquidity zone there. So moving on to the pound. So the pound isn't necessarily the same among our other risk currencies. And why is that? So when the Bank of England had their monetary policy statement, it dipped the hell down. Like it dipped the hell down. So Bank of England, so they were forecasting for them to start tapering the bond buying program. There was no talks about that. And why were they forecasting that? Because the Federal Reserve was doing that. Like, most likely the Federal Reserve is going to start tapering the bond buying program come September this year. And what does that mean? So when you start to buy less government bonds or government or treasuries, that shows health in the economy. You know, it's saying that the government doesn't need so much fiscal assistance or financial aid from the central banks to help them survive and recover. So the Bank of England unfortunately didn't say that. They just stuck to their dovish tone, and obviously there was a strong sell-off in the sterling and UK equities. So with that being said, what am I looking for here? I'm in a bit of a risk on sentiment just with the technical and fundamental perspectives which I've discussed previously. So what I'm liking here, I'm liking if we can stay above 138,600 and take some high risk buys here. If not, I'm taking some safer buys above 139,250. Okay, so why am I going to take those buys above here? See, if we can break above this little high time frame consolidation zone, range, order block, whatever you want to call it, I can see that there's a lot of buy side momentum, and obviously the sellers have been pushed out of the market, or they've been, so sellers have been, pushed out of the market. In that perspective, I can potentially see like a strong pullback here. You know, you see price get pushed to a better demand zone. You know, do like a bit of a high time frame double bottom, take some high risk buys here. I don't think we're going to sell off back to 138,800 because, you know, all this was just because of the Federal Reserve, you know, coming out with their hawkish statement about the economy. I don't think we're going to push down here. If anything, we're going to push down here, 138,600, and we can take some high risk buys here. And, you know, we could potentially have like a swing trade, you know, 138,600, 12 pip stop loss. We can definitely do that and take it to the next high time frame key level. And what's that going to give us? That's going to give us like a, 60 pips, 12, you know, that's going to give us like a nice 1 to 5 return. Okay. And more than likely, if we do come down to here, it's going to be like a weak entry. More than likely, I don't think we're going to generate a counterbody support just with how aggressively it bounced off here previously. So that's what I'm looking on the pound dollar. On GJ, in order for GU to play out, I'd probably want to see GJ to come back down to here. Oh, is my computer frozen? It's frozen. Just give it a sec. Just having a bit of a seizure. Alright, so what I'm looking at is if we can get like a high time frame double bottom at 153, 150, you know, that'd be a very high risk buy. But I'd be feeling a lot safer if we can maintain above this high time frame order block and take some continued buys here, right? And probably place my and probably it really depends on the candle closures. You know, when I'm looking at the 30-minute, 1 hour, even a 15-minute candle body closures, if I'm, you know, taking potential intraday / quick scalp on the market, you know, I could, you know, you can get away with, you know, possibly, you know, 5 to 10 pip stop losses or 15 pip stop losses. So yeah, that's what I'm really looking out for. So if we can remain above here, I feel a lot safer with these buys at 153,900. Sorry, so 153,900, and I'm liking how we did retest this little previous order block high. So that's what I'm really liking at the moment. You know, we did get some aggressive bounce backs. Did get a bullish engulfing. Fortunately, not unfortunately. Fortunately, this wasn't a bearish engulfing. Okay. So yeah, more than likely we are forming a bit of this high time frame range. And let me go to the UK economy. So, sorry, we go to UK economy. We do have money supply and mortgage approvals. We do have GDP numbers on Wednesday, right? So that's probably where you're going to get that's probably where you're actually going to get some volatility with the pound. Then we've got PMI data. But also your PMI data, like I said before, you can get a good indication from your PMI data from the GDP numbers, okay? Because they all correlate with each other. Because manufacturing PMI, Purchasing Manager Index, is just talking about their inventory levels, their labor force at the moment, and what's actually forecasted. What they're actually going to what they're forecasted to produce or manufacture in the coming months, coming quarter, so forth. It's just telling you the current status or forecast of the manufacturing industry across multiple sectors and industries. Okay, it's not just like one particular one, it's like multiple. So yeah, then we go to GJ, we got unemployment rate to start the week on Monday, industrial production, consumer confidence index, okay? Oh, and we got manufacturing outlook as well. So, and PMI on Thursday. So yeah, with that, I'm really continuing with my risk on sentiment, but it really depends because, like I said, I don't think early in the week we may see a bit of volatility because we've got people closing it, we've got investors, institutions closing off their positions. But yeah, you're going to see a lot of volatility come the start of the month, which is going to be on Thursday. So I'm really looking at idea, stay above here, get some nice candle closures above here, fail to come below and retest below here. If we retest below here, we could probably take some, sells, but I'm not really inclined to take those, like take that position. You can see here, we're at this high time frame, we're in this high time frame range. Yeah, we're in this little sensitive price level. So moving on to USD Cad. So USD Cad is essentially the inverse of what we've been talking about. After reaching these highs from Jerome Powell saying, fuck the risk on sentiment, fuck the rest of the economies. He was I guarantee you prior to that monetary policy meeting, he was holding these Dixie longs. I guarantee you, 100%. So essentially what I'm looking on USD Cad, and with the Canadian economy boosting, and with oil prices just freaking pumping, like rallying at the moment, because OPEC's, OPEC's like being very safe at the moment. I believe because I think they're getting a bit of fear from the electric vehicle industry, renewable energy industry, about possibly taking over. But is oil ever going to be taken over? No way, no way, no way. Anyway, that's another discussion. So we can see on a technical analysis perspective, we're in a high time frame range, right? We got our highs here, failed to break above here. What I'm liking here, we can definitely see a bit of a lower, yeah. We can definitely see if we, like each time we've come below here, we've actually quickly been brought back up. There's a lot of buy side liquidity when it comes to these areas here. If we can get some nice candlestick closures below 122.900, I'm very inclined to take some sells, and that's going to help with our case with our GU longs, our Euro longs, our Aussie longs. So it's got to make sense. So when I'm covering these multiple currencies, multiple economies, they all have to be aligned and make sense with each other. Because if I long the Euro dollar and short the Aussie dollar, like most of the times it doesn't make sense unless I see some strong fundamental catalyst in the Australian economy, for instance, or whatever. So moving on with USD Cad, I'm really liking that on technical perspective. So if we can get some kind of what closures below 122.900, yeah, 122.900, I can probably see continued selling pressure. But for that to happen, Dixie, my best friend Dixie, she really needs to come below here. Okay, yeah, she really needs to come below here. If she comes below here, there's a good chance that she's gonna sell off. She will sell off. If we get some nice candlestick closures below here, she's gonna sell off, or we're gonna get manipulated. I don't want to say manipulated, like we might get a strong wick back up to the upside. You know, there's always that potential, so it's always good to, you know, monitor candle body closures and wait for the candle body to close. So yeah, that's what I'm really liking on USD Cad. I really discussed about Dixie. You know, I'm liking if we can come below 91,670. I see a lot of selling pressure. If we come below here, I guarantee you we're just going to sell off. Because we're in this like bit of a bearish corrective structure, right? You know, we've got these lows here, kind of those lows there. So yeah, we definitely got that at the moment. So yeah, that's what I'm really looking out for. So with a continued risk on sentiment, unless Dixie just comes above and breaks and retests above here, then our other trades are going to be invalid, but we can still take those trades as kind of trend trades and continue selling our risk currencies with a risk off sentiment. So gold. So gold is essentially been the same thing. You know, we actually dipped down. This was actually, so this candle here was just that FOMC meeting. And then we did have, I believe we did have inflation data that did actually push price further down. Then this was just adding fuel to the fire, really. Just gave you stronger confirms, especially once we actually broke below here. We did actually come down. Now we're forming like a high time frame range, which is what we did here. Okay, now we're forming this high time frame range. So honestly, like on the high time frame perspective, you know, from here 1788 to, you know, it's 180 pips. You know, you can definitely make money in this range, 100%. Take some high risk buys here, take some high risk sellers here. I really, you know, I'd prefer to be taking some high risk buys here. See if gold can start to rally back up. But like I said, if we get some continued selling pressure down below 1767, we can continue the sentiment with continued sells on gold, come down to the next level. But more than likely, once we actually come below here, we're actually going to come down to here. So there's going to be like, if we do come below here, there's a good chance get some nice candle body closures, get a couple for our candle body closures below here. We can see continued selling pressure down, and we will push to the previous high time frame key level. So that's what I'm looking at. Take some buys here with a bit of a risk on sentiment. And well, there's no inflation numbers coming out within the US economy. But yeah, if we do get some fear headlines, we can definitely take some longs on gold. Take some safer longs once you actually break and retest above here and we can definitely play it with continued US dollar weakness. Okay. So moving on, so that's essentially what I'm looking at. What else? So let me just quickly have a look at US 30. This is my analysis on US 30. Stocks only go up, they rarely go down. So just buy the dip, like literally. No, I'm kidding. So I'll give you a brief analysis on what I think on the Dow at the moment. So I like how we're approaching this high time frame key level. I'm liking if we can actually remain above here with a continued risk on sentiment. If not, we could take some high risk buys if we actually dip below. If we do get like a 400 point correction, I don't think we will. Highly doubt we will. But I'm liking if we can actually remain above here, get some nice candle body closures on a high time frame, and continue up with a bit of a risk on sentiment, and it's going to help with our Aussie, Euro, Sterling, GJ longs, USD Cad shorts, Dixie shorts, and yeah, it's really going to help with that. So I'm really liking how we actually did break above this range and start to shoot through. Yeah, so yeah, that's what I'm really looking at on the Dow 30. I've actually still got a position open because I believe I placed a position. Yeah, I placed a position. I think it was about here on Friday. Fortunately, I wasn't awake. Yeah, I wasn't awake for like New York. So I'm targeting these previous highs. Like originally, yeah. So originally my take profit was like here, but now like potentially write it out, but more than likely I'm gonna close it as soon as the market opens because it's a good win. And especially with the indecision at the moment, it's the end of the month. I'm not really going to close that position. Anyways, that's all I've got at the moment. So if you enjoy the analysis, please be sure to like and subscribe and comment if you have any questions. I've got my Instagram link and so be sure to check that out. I always provide free analysis every week. I also have a Telegram channel where I discuss, the trades I'm taking on a daily basis, on an intraday basis, and that's all for free. So if you enjoy the content, be sure to join, and I'll talk to you next time.